Good day, guys. Welcome on another episode of Price Weekly Reviews. And on this episode, we'll talk about, the normal thing we talk about, what the trades I took last week, what I should have done on the ones I lost, and what I shouldn't have. So I didn't take much trades this week. I think so. I didn't even do much on this week's trades. But let's just head to the chart straight up. So this week I'll start from USJPY. I like USJPY a lot. So from USJPY, this blue vertical line here is last week Monday. I just used it to mark when last week Monday started. So USJPY from the daily time frame or from the 4-hour time frame as usual. So we had our price react from our point of interest on the 4-hour time frame. Though price didn't really, react on it very well, but I think, this will do. So after price reacted from that area, price started consolidating on this Y. Price was just, ranging. So I didn't pick any trade from this zone. I waited for my breakout. So with my breakout was when price broke above this high. This was one of the last highs that caused the breakout structure. Market broke below this low. And on pulling back, it created this high, and this high couldn't break below this low. So I marked here more like a protected low or something like that. Then also I knew that if price broke above this high and give my inducement, I think I will call that a market structure shift. So I waited for price to break above that high. I didn't trade anything around this level. I didn't pick any trade. I just waited patiently. So when price finally broke above this high, I gave my inducement, which is this pullback. This was a structural inducement. It's more of the kind of inducements I look out for. Guess what? Price left me. I also spotted this trade when price broke above this high, then gave us our next pullback, which is this candle wick as an inducement. I took my trade from the nearest POI to liquidity, which is this breakout block here, and price still gave us a missed entry. No hard feelings. We move on to the next. I don't want to make this video long. I don't want to make it long, but on my YouTube channels, I'll start making longer video for my YouTube channels. You just have to stay tuned to that. So let's go to the next pair. Now, gold was more of a heartbreaker. So I would love to start the storyline from here, but I'll just skip that. Because I don't want to make the video long. So skipping that, price reacted from this zone around last week, and I was giving us a high and gave us a new high because it broke above this high with the body closure. So I knew that price would come back to react from a higher time frame POI to continue the buy, because when making the high, it was not an impulsive move. It was more like a choppy move. So let's go to the 4 hours time frame. I'll show you. So on the 4 hours time frame, I spotted that this order block, which was the last bearish candle before the impulsive move. And also, if you watch carefully on the higher time frame, this breakout structure was more like a liquidity sweep. You understand? It was not really clear. So that was when I priced myself from that angle. Would have spot small sells, but I didn't pay attention to it. There was a sell along this zone, but I didn't pay attention to it. I ignored the whole thing and waited patiently for my own zone. So I'm waiting for price to react here. Price gave me this movement. Price got to this zone, this level, and started buying. I thought that maybe we missed it. You understand that maybe I've used another POY in a smaller time frame to continue to buy. So I started looking for entries, which I found a good entry, but price took me out. So this was now the liquidity that I was waiting for price to form, which it didn't form. This is now the structural liquidity, more like an engineered liquidity. Sorry, this was not the engineered liquidity that price formed. So when price tapped into my order block, 4 hours order block, I started looking for my re-entry, and unfortunately I still had missed entries. I know I've been having a lot of missed entries last week, so I have to work more on my refinements and my entries. So price mitigated this low. Price mitigated, gave us a high. Our height and POY gave us a high. Gave us this low, and this low was more of like a sweep. I don't use sweep of liquidity in my Confluence, but I think he's getting clearer to me, because most times when price sweep a previous low, I don't mean breakout structure, sweep a previous low, it tends to move in that direction than when it doesn't. So this was a sweep, as you can see. Price started buying, and I waited patiently for price to break above this high, because it's like the last high it created before the sweep. So when price broke above this high, a lot of people use this as an engagement. Many use this as an engagement, this pullback here, but I found a more valid engagement, which is the structural engagement I marked here, structural liquidity I marked here. So this was a more valid one to me, so I didn't use this, but it's still valid if you wanted to. So I picked the POY nearest to liquidity, which is this breaker block. Both my first entry and my second entry were just missed. Oh god, they were all missed entries. But on my studying, I got this. Now this is a high. Do you get? This is a high, a lower high. This is a lower high. I didn't spot this. Now this lower high broke structure here. This was a low, a high, and this lower high broke structure. You understand? Wait, let me draw it for you to understand it. So this is a low, and this is a high, and this is a lower low. So this is a lower low, lower high, lower low, and lower low broke structure. You understand? Now when price rallied to this area and broke above this lower high, and also it broke above this this lower high and this lower high, giving us a double break of structure. Yeah, it gave us this pullback here, but even if I spotted it, I wouldn't have taken the trade, to be honest with you, because it looks like an inducement zone. You understand? It didn't seem legit to me. So it gave us this pullback. As you can see the pullback there. This is the pullback it gave us. Remember the first pullback after a market structure shift or a break of structure. So let me go back to 45 minute time frame. Sorry, because my screen is not that large to contain all the images. So it gave us that pullback and bought with the inducements, the PO1 nearest liquidity, which is this breaker block here. So a lot of people would have risked taking that trade, but me, I wouldn't have risked it. I would just ignore it. So it just depends on what you want for yourself, your own rules, your own Confluence, and every other thing. And price missed both my first and second entry, and I took an L on the first ever entry because of impatience. So if I was patient enough, I wouldn't have taken this loss. Do you understand it now? So you have to just be, patient. This was the thing I said I would explain, but I don't think I have time for that. So on to the next. The next one is BTC. So in BTC last week, I know a lot of people had this buy, but lastly it was a loss. But actually came to my zone, tapped me in, and went almost straight to my TP, and boom, it did otherwise. As you can see, I actually placed my TP here before, but this zone, but I felt greedy, so I just extended it to this strong liquidity. So that's life for you. So now, what happened in BTC? BTC movements here would be best explained on the higher time frame. Do you understand? Let's go to the 4 hour time frame. You see what I'm trying to say? Or should I say the daily time frame? Okay. The 4 time frame is also good. Now, BTC is reacting from this key level. For those that trade key level, this key level here, I don't trade key level, so I don't really know much about it. But I know that BTC is reacting from this key level here. If you go to the daily time frame, you will see that price swept this zone. This candle, this previous day candle. So price sweeping this previous day candle means that it has grabbed liquidity on this previous day candle and it's going to buy. So we keep on buying till this daily candle high. Do you understand? So to the 4 hour time frame, we have to look for our entry, liquidity, and point of interest, since we have gotten our bias. So when price was reacting after sweeping this low, this previous day low, they're reacting from this key level. So when price reacted from that key level, we waited for a break of structure, and this was the last low. Let me zoom this in, and this was the last lower high price created before this sweep. So when price broke above it with this candle body, we've seen our market structure shift. Now, before price broke above it, it created a pullback. Remember the type B setup. Pullback before a market structure shift, a break of structure, is our inducement. So this pullback before this MSS occurred, was marked as our inducement, and BTC reacted from this other block here. So that was my bias, but I didn't find any re-entry. I was looking for a re-entry because I kept on looking for how to continue the trend, but I couldn't find any. But this was what I was looking out for. What I was looking out for was, as price broke above this high, giving us a double break of structure. As you can see, it broke above different highs. Do you understand? And before beginning above that high, it gave us this pullback here. As our inducement, and we'll buy from this other block. But still, I don't trust this trade because BTC is kind of being bearish right now. So it can buy, it may not, but I'm still waiting for the bearish trend to continue. If I'm buying, I only buy to this high. If I'm buying, I only buy to this high, but I won't take the trade because the RR will be too low. I only buy to this high. The one is 3 RR, so I might not take the trade because the RR will be small. So I'll just watch it play out. So that's for BTC. Now let's get to GBP/JPY. Now GBP/JPY was the only trade I took last week that went well. And remember last week we talked about this point of interest that GBP/JPY is reacting from. So I remember I said that you shouldn't buy or sell yet till price gives you a proper market structure shift and a proper inducements and a proper entry. So when this was this vertical line was used to I'm using it to mark out for this week. So when GJ came back to this zone to react, remember the rules support and resistance levels. The more price gets to that level, the stronger it becomes. So GJ have rated off this level first time, second reaction, and this was the third reaction. And I knew that if GJ reacted this third time, there are two things that will happen. It's either it continues the uptrend or it breaks below. So I was patiently waiting for it to do its thing. So now how did I get my entry? Now let me show you how I got my entry. Now this, remember how I always say read your market structure. Price were moving in these angles. So price gave us this high and this low, but this low couldn't break structure, so it gave us this high that couldn't break structure. So I knew that the trend might have changed. So when it broke below, I knew that that's a market structure shift. But are giving us lower high, lower low, lower high, lower low, lower high, lower low. Gave us this lower high and this lower low. So this was actually or basically the last break of structure to the downside, and this is our what, and this is our high, lower high. So wait for price to break above this level for us to continue the buys. Do you get? So when price broke above that level, as you can see clearly with a candle body closure, we patiently waited for what, inducement, and our inducement is the first candle pullback after a break of structure, a market structure shift. So when price gave us that market structure shift we're waiting for, we saw this pullback. Now what was the pullback? This was the pullback. As you can see, this was my inducement, this candle pullback, but it was more like an engineered liquidity because it couldn't break structure. It didn't break structure, so it's an engineered liquidity. And what do? We take our POI nearest to liquidity. So I bought from this breaker block, as you can see here, and I was targeting above this high before, but I just kept it here because this was the last high that caused the market structure shift. But I just kept it a little bit below from my previous experiences to avoid stories that actually is a hat. So as I was going, I spotted this trade. Price gave us a break of structure here and a break of structure here, giving us a double break of structure. I'm using this as an inducement, but because this was a structural movement, I use that instead. I always prefer structural inducement more than structural liquidity, more than single candle inducement, but doesn't mean I don't use the both. So I've taken my POI and I took my entry on this unmitigated POI nearest to liquidity, but I knew that my targets wouldn't be much, so I didn't take the trade because my targets will obviously be here. That high trade, the nearest drawn liquidity. My targets will obviously, I'll put my stop loss somewhere here. Then my targets will obviously be this zone, this high here. So this is just a 1:3 reward ratio, so I didn't take the trade. So I let GJ do its mind. Now I would have fallen for this trick, but thank God I didn't. I was not active then when this happened. Remember, this is a double break of structure. Price broke above this high and this high and gave us a clean structural liquidity. So I would have taken my trade from this zone, this breaker block, unmitigated breaker block here, and I can see price reacted from it and it gave us an L. So that's to say that sometimes you might be right, but market will still do what it wants to do. Now, what's the next thing I did? When price started selling, I knew that if you come back or watch our previous video, you see when I said markets will sometimes use ease liquidity or ease breaker block. Use the breaker block for the liquidity use breaker block as liquidity for the other block. Now, price, this was our first entry, and this was our first entry. Price gave us a structural liquidity, an engineer liquidity here, and in the process of giving us engineer liquidity, it also created a double break of structure. As you can see, price broke above this high and this high. It was an impulsive move. You can see the impulsive move there. There was no major pullback. It was an impulsive move, and you can see after immediately giving us this double break of structure, it gave us this pullback. Now if you go to 30 minutes time frame, you see very well clearly that it's an impulsive move. It's not a choppy move. You can see clearly this was an impulsive move, and it gave us, after breaking above this high, this was the next pullback, which is our liquidity. Now I spotted that, and I took my entry from the this breaker block here, which is the inducement, which is the POI, POI closest to inducement. So this was how I got my entry. It is on the same level with the other block. As you can see, my stop loss is below the other block to avoid story that touches the heart. So whichever way, it all went good, and price smashed my TP again. So this week I'll be expecting price to react from this OB here, because this is our inducement. These are inducement. I'm expecting price from this OB here, but the price should fell that this other block here, I'll be expecting price to come back to this level, this OB entry I had previously, this level here, then using this zone or this OB entry as our liquidity. So these are the trades I took last week. I didn't take much trades last week. Then I want to show you this on silver. This is what greediness can do in trading. So remember when I had this trade about last 2 weeks, and I've been wanting to join this trend, but there was no way for me to join. Yes, I still have a lot to learn, you know, how to click into continuation and others. So, but I had my TP levels, but price started reversing. As you can see, this is the 1:11 ratio. I was riding this, but when price gave me this structure here, when price formed this structure here, I knew price would start reversing, so I had to close the trade. I started looking for buys to this level, because I felt like price will, you know, continue standing from this level, because this is a double break of structure, inducement, double break structure, and the nearest POI to liquidity. So as you can see, it reacted. It will always react. It reacted, but unfortunately I was wrong with my bias, so price broke above it. So that's it for this week. I don't want the video to be long, so please bear with me. I'll start creating longer videos, you know, explain things down, bring things down the more on my YouTube channel. So just make sure you tune in to the YouTube channel. I will post the link. I will add the link to this video so you can get my YouTube channel, and I'll also post this video on my YouTube channel. So just subscribe, leave a comment and share. Thank you very much. See you on the next one.